Welcome to Business Line's State of the Economy podcast, where you'll find insight, analysis, and the story behind the numbers.
Namaskar, my name is Shishir. Welcome to the latest episode of State of the Economy, where we are going to talk about macroeconomy and most important, the high frequency economic indicators which have been made public 2 to 3 days. And we have with us Mr. Rahul Ahluwalia, his co-founder of Foundation for Economic Development. Rahul, welcome to this episode of podcast.
Thank you for having me, Shishir. Glad to be here.
Yeah, Rahul, one particular number, which is a GST number. Everybody talks about very high number. And the number which is out is 1.82 lakh crore, which is 3 months high and the second highest in the current fiscal. But one interesting trend is that the collection from import is higher than the domestic one. What exactly we can read in this number?
Thanks, Shishir. It's an interesting question, and there is a lot of complexity behind this question, right? And I think one instinct everybody always has is to be afraid of imports in some sense, right? I think a very important thing that I learned from my mentor, Dr. Arvind Panagaria, is that we should not be afraid of imports, right? Imports are the entire reason we export, right? So I love the way he sort of taught me this fact that the only reason you export something is to be able to import something. If you don't import anything, then there is no reason to export anything, right? Like, why are you exporting anything in the first place? So I don't think we should be afraid of imports. We should be trying to increase our exports is the way to sort of think about it, right? So I don't think we should worry that the GST collection from imports is higher, the GST collection from domestic is higher. It does indicate that imports are increasing, but as long as our exports are increasing at the same rate, it should not worry us. I think the problem is that the exports are not increasing at the same rate, right? So I think recently the current account deficit has widened a little bit. So, and generally, if you look at our export performance in the last 14 years almost, right? So it's not just this government's problem. But our exports performance has been relatively flat. Our CAGR of exports year on year has been around 3.5%. Right? Before that, before 2011, our CAGR on exports was typically in the range of 10% or so. Right? And that is what powers exports is what powers economic growth, right? And I think we should always try and remember this and focus on that.
And in fact, the refund for the export has shown a much steeper decline than the refund for the domestic one. And that is why the net collection of GST is 14%, just because of the lower refund on the export. And what you rightly mentioned, that export is low, and that is also reflected in the GST number.
Exactly.
Now, coming to the second part of this GST thing, now the festivities we are almost entering into the festivity phase.
Right.
So, and the target for GST collection in this current fiscal is 11% if we go by the budget number. Right. So, what kind of trend you see in the GST collection in, say, next 3 to 4 months or next 6 months?
I think the general trend on GST has been increasing, right? So I do think that the GST will continue to go up. And again, like you mentioned, on a seasonal basis, this is the season where economic activity picks up. So quarter on quarter, it will increase, but I think it's important to compare it to the same quarter last year and see what happens, right? Because that adjusts for seasonal changes. But one other factor that I want to mention here with respect to GST, right? And I think it's a important one, and some people are discussing it, but I think it's important for all of us to remember this, is that the GST collection going up is perhaps a positive sign, but it is not unambiguously positive, right? Because one of the things that's happening is, and I'm sure you have picked this up, is that the informal sector is, I think maybe collapsing is too strong a word, but certainly it is hurting, right? And GST collections can go up for two reasons, right? Conceptually speaking, GST reasons can go up because the formal sector and the informal sector are both growing, or it can go up because the formal sector is growing at the expense of the informal sector, right? Um, and I think it's this is a very, very important distinction, right? Because if the formal sector is growing at the expense of the informal sector, then the GST increase is just recording a increase in taxes as a proportion of our economy. It is not recording a growth in our economy per se, right? So आपका पहले taxable portion 50% of the economy था, now the taxable portion has become 80% of the economy, so the tax will go up, but that doesn't mean the underlying economy is going up, right? And I think even the election results to some extent reflect perhaps some of this, right? That politically the growth has not been rewarded. So it makes me wonder if the growth is happening only in the formal sector and not in the informal sector. And there's nothing wrong with the formal sector growing, as long as the formal sector is growing, because there are advantages to being in the formal sector, and not that the disadvantages of being in the formal sector are now being extended to the informal sector, which is what in some sense the GST does, right? It says ki aapko, you have to be in the formal sector whether you want it or not, right? So even if you are supplying to somebody, you have to have a GST number. So all of these things. So this is something I think it's a very important thing for us to remember and try and focus on as policymakers.
Okay. Rahul, since you talked about political thing, and one of the political issue is the inflation. And if we go by the PMI manufacturing number, where the number has slided down slightly, but the rate of inflation for the manufacturing sector is very high. And people also say that the rise in the collection of GST is also on account of the inflation. So can you correlate that when the inflation for the manufacturing sector is picking up and when the GST collection is picking up? So is there any correlation between these two?
Certainly, I think because overall inflation does incorporate all of these different components, right? So there is certainly a correlation here, and it is important. I think real changes are the only way that economists, so inflation-adjusted changes are the only ones that economists encourage people to look at, and for very good reason, right? Like inflation, in some sense, does not reflect an underlying change in the actuals in the economy. So it's very, very important to adjust for inflation. I think the inflation story is particularly confusing right now, right? I think we have inflation targeting, very strong inflation targeting in place from the RBI for many years. Interest rates have been high as a result, right? So because the RBI wants the money supply to be relatively controlled, and several commentators have been calling for actually a relaxation of this, right? So people say that to control inflation, we're trying to keep interest rates high, but keeping interest rates high makes investment less attractive, right? So because you can just put the money in the bank on short-term or long-term RBI money, and you don't really need to find investment opportunities. So several people are saying that the RBI and the government are being too conservative on inflation, right? And actually, if there is ever any moment for inflation to be less of an issue, it should be now, because there are no national elections on the forefront. There are some state elections coming up, which unfortunately is a perennial political compulsion. But it's possible that the high inflation is what is also causing the dip in manufacturing investment, etc. Right? So there is some linkage there.
Okay.
Several commentators do say that there is. Yeah.
Okay, now we are waiting for the another high frequency economic indicator, which is the retail inflation based on consumer price index. And that will be out on 12th of this month, next week, that will be out. So going by the current trend in the vegetable prices and also in the cereal prices, what is your expectation for the July print?
I think the expectation should be that it will be around the 4 to 5% figure, right? There is nothing particularly unusual going on right now. See a very large change from either the trend or what the inflation target is. I think the inflation target for the RBI is around 4% or so. So I expect that we should see something in that ballpark. So I don't think that we will have unusually high or unusually low inflation for the retail sector.
Okay. Now coming to my final part of the discussion, which is the fiscal deficit number. The first quarter number is just out and which is showing just 8.1% of the budget estimate.
Right.
And interestingly, since the 3 months we have seen were the election months. So not much expenditure happened because of the model code of conduct, and that has affected the inflation for the first quarter. Right. Now, the big question is, since we are talking about 11.11 lakh crore of capital expenditure, and we have very limited period available in this year to spend that. So my first part of my question is, the last question is that, can we think of fiscal deficit lower than what is said in the final budget of 4.9%? Second, do you think that it is really challenging to meet the capital expenditure target for the current fiscal?
On number one, I think it would be very unusual for a fiscal budget to come in lower than the expectation, right? It typically doesn't happen. And the main reason for that is most of the government budget is actually pre-committed, right? Like those numbers are already committed on salaries, debt servicing, etc. So actually, new expenditure is a very, very small proportion of any budget. And while you're right, there were no new announcements being made because of election, model code of conduct, etc. Most of these expenses stayed, right? Because they're just rolling over and under progress. I think the new capital expenditure, it is possible that they will not be on track. I do think that that's likely. I think one is because of the time lost because of the election itself. And then, of course, there is the fact that post-election, there was some uncertainty, right? So I think the government earlier had expected to come back with a very clear majority, and there were very strong plans in place for spending, etc. But I think given the election result, I think there was some uncertainty around exactly how things will be. But I think that is going to get offset by the fact that you have two coalition partners who are going to demand sort of their share, right? And we've already seen that. So we've already seen big allocations for those. So I very much expect that what you quote unquote saved on sort of that uncertainty and the election is going to get taken away by coalition partners and additional spending in those states.
Okay. Thank you, Rahul. Thank you very much for talking to us and giving a perspective to various high-frequency economic indicators. Thank you.
Thank you so much, Shishir. Thank you for having me.